Hi folks, Vipin here. Today we're going to talk about Narasimham Committee's recommendation on banking reforms. Now this happens to be a very important topic for the second PU economics students, so I will be doing this video only from that perspective. Now let's get started to see what are the recommendations given by this committee in order to improve the banking sector. Now, the first recommendation they put forth is reducing the SLR or statutory liquidity ratio. Now, what is SLR? There is a certain amount of money which the bank must keep in its account without having to utilize any portion of it. That is, a certain part of its cash, they're supposed to lock it in their accounts and not use it for any purpose. So currently the SLR rate stands at 23%. Which means 23% of a bank's cash reserve cannot be utilized for anything. Now this is the amount of cash the bank will keep in its own account. In the second case you have CRR. Now CRR is currently at 4%. CRR is the amount of cash a bank must keep with RBI. Now when they keep this amount of money with RBI, they have no option to go about utilizing this fund for any purpose. It just is locked in with RBI. So they wanted to reduce the SLR and they wanted to reduce the CRR. Now when they reduce these two particular rates, the total amount of funds available with the bank is in fact more. Okay, and when there is more amount of funds available with the bank, there is more utilization of the bank's ability to give out loans. There is a statistic that goes around that says if the CRR happens to be reduced by about 0.25%, the banks in India will approximately have around 30,000 crores with them. Not every bank, all the banks put together, there is an additional cash of 30,000 crores in the economy. So you can see how important these ratios are. The third one are directed credit programs. Now what is meant by a directed credit program? Now there are certain programs which are managed by different banks when it comes to financing traditional cottage industries and small scale industries. Say industries which are into arts and crafts, handicrafts, anything which happens to be traditional in nature. Now banks are required to fund these industries because that's how you go about protecting culture and that's how you in fact support the rural economy. So that's one more recommendation they put forth. The structuring of interest rates. For a long period of time, the central bank RBI was in fact responsible for the changes in the interest rate. As in, RBI had just one interest rate which all banks had to follow. Now there is something which is known as a base rate. Now the base rate was previously something which is decided by RBI. Okay, the base rate was fixed previously by RBI, but now each bank has its own authority on what they can decide to be their own base rate. There are some banks who say the base rate is 10%. The other banks in fact say that the base rate for them is 9.5%. So it's up to these banks to decide what can be the rate of interest they want to charge on loans. Then structural reorganization. For a long period of time, the banking industry had too many employees and that led to too much of mismanagement. So the Narasimham Committee recommended that there be a reorganization in the way in which the banks work. During the mid-1990s, there was a large-scale voluntary retirement schemes which especially affected the banking industry. Now they did that because there were computers that were introduced and they didn't want so much of manual labor going around. Now by doing so, banks have become so much more efficient, and by doing so you have core banking in every nationalized bank there is. This is one more recommendation given by the committee. Now the others that they've put forth: nationalization of banks must come to an end. Now the reason they suggested that is because when nationalization actually happened, it was actually for the good of the economy, because a lot of private banks, once upon a time Canara Bank was a private bank, they weren't so friendly when it comes to the policies they had for their customers. So in order to make it much more friendlier for the entire country, for the entire citizens to access banking facilities, the committee in fact proposed the nationalization of banks back then. Now that's no longer required. The banking sector has become so much more liberal. The banking institution has been well accepted by the people in this country. So there is no further need for liberalization. There is no further need for having the government take over more and more private banks. A good advantage of having the private sector is it promotes competition and it encourages people to be innovative. In fact, ICICI Bank and SBI regularly compete with each other to see who performs better in the annual results. And not to my surprise, ICICI Bank always does well. Setting up of new banks, it's been nearly 2 decades since RBI issued new licenses for banks. In the year 2013, RBI has in fact come out with a proposal to increase the number of licenses for the banking sector. So there will be new banks which should be set up. Hopefully in the year 2014 you could see more branches of new banks being set up. The rumor has it that Reliance and Tata Group and maybe even the Birla Group could even have its own banks. So you could see in fact new banks come up in the days ahead. Removal of foreign banks. RBI has even encouraged foreign banks to set up their operations in India. And the best part is, for most of the operations done by these foreign banks, they're able to do that with 100% FDI. That is, they no longer have to tie up with a domestic partner when they want to do business. Now, if you want to open an account with Citibank, you can do so because Citibank is established in India. It's established as Citibank India Private Limited. So you can in fact go and open an account with them. The foreign bank need not be tied up with a domestic bank for them to conduct their operations. So that's one proposal that they have put forth, and so far it's actually come out in a very, very positive note. You have many foreign banks doing very well in India. They're into merchant banking operations, they're into investment banking, they're into brokerage, they're even into retail banking. So foreign banks in fact are doing quite well. Removal of dual control. Dual control here refers to there was a period of time when you had both the Ministry of Finance and RBI managing banks. And you can imagine how difficult it would get when you have two entities managing one. The Ministry of Finance proposals would usually end up in conflict of interest with RBI proposals. So you no longer have this. The Ministry of Finance does not regulate banks these days. It is RBI that has got the complete control when it comes to regulating banks. Then autonomy to banks. Now autonomy to banks refers to, autonomy to banks, I thought I had missed out a point there. Autonomy to banks here refers to banks having the liberty to elect their own representatives for the board of directors. Now, especially a bank like SBI regularly conducts shareholder meetings wherein if a director happens to retire or if a director happens to be quitting, the shareholders get to decide and see who's the next guy who's going to take over the job. So this is one more autonomy that they've given to banks. Previously it was a lot of political bias which would in fact see who are they going to select to become the next director in a bank. Now you no longer have the politicians interfere in this. It's in fact we the shareholders who participate in the meetings and say that okay, I prefer to vote for you when it comes to choosing our representatives in banks, in directors and chairmanships. The recruitment of state. Now what happens here is this has not been completely implemented though. That is the banks being given the complete autonomy to go about recruitment of employees, because even though you have banks taking up of so much of autonomy, the recruitment is still done through the government methods. That is, you have tests that you need to write. The bank PO exam is one of them. Write a bank PO exam, go through the interview, go through the group discussions, and then finally you could get recruited. Especially in government banks, they don't do the recruitment like how they do in private banks. So that is not yet completely implemented. The recruitment of government banks is not so transparent and is not like how private banks in fact go about hiring. I hope you found this video helpful. If you have any queries, do leave them in the comment section below and I'll get back to you as soon as I can. Thank you for watching and do subscribe to my videos. Bye.